Welcome to Trading Lounge and the Australian report for Friday, March the 11th. And yeah, look, I still don't really know what's going on in this place here because our markets are acting a little bit differently from the US markets, and that means that this correction over here started a long time before the US markets, and we do have a nice sort of A, B and C correction here for a wave 4 that's pulling back roughly to where it should pull back to. This is a weekly chart, of course, so just looking at that here, so we've got our 38.2%. It has dropped a little bit below that, but that's fine. And yeah, so I've been looking at this as wave 1 to the upside and back for wave 2, and then looking for the next move up, and that's fine. But with the US markets and US banks and that, we're expecting a move down. So then I sort of start to think, well, what's wrong with when I'm looking at this pattern? What's wrong with that? Well, one of the things that I find that is the move down here as a wave C is rather sharp for this move down. It should be a little bit lazier. And then I wonder, well, we've got a new top in here. Do I put this wave 4 here and this wave 5 over here and this wave 1 over here, and then we're looking for an ABC for wave 2 because wave A is nice and sharp, and then we're looking for more movement down in the US markets. So then I think, well, are we looking back for this wave 2 here? Are we already in play in that point? So I've got these sorts of things going on, and I was hoping that when I sort of struggle with either being Arthur Martha in patterns, I sort of just wait for the intraday to clean up and show me the way forward. But it's kind of doing that. I can look at this as just on the daily chart here as 1 here and an ABC for wave 2 here, and that's fine. And the market hasn't, has moved up quite nicely. It hasn't sort of dropped back at all. The move up here can be counted as corrective, so it can fold back here. So I can't also really turn bearish on this until, the 7,000 becomes the retested resistance. So I'd need to see a move back. I'm just going to remove that. Moves back down through here. So I've got this sort of lingering in the background, and I'm thinking that in the US markets, they're got a bit more to move down. So I was thinking of a low coming in around the March equinox in the 20, 21, 22, 23 sort of area, depending on where you are in the world, because March equinox is an accounting period as well, also for the Feds as well. So there's a lot of money a lot of decisions that change hands around that time. So we had our low in the GFC in a bit earlier in March actually, and the COVID low was also the equinox as well, and then there's various dates that span out from the solstices and equinoxes and so on and so on. So I've just really been waiting to try to understand something within here, or the banking from the banks, and I normally follow CBA because it's, let's just say it's 10% of the index, a bit less. This is the banking sector, the XXJ. It's also pulled back about 30-40%, and I was looking at this move up here being corrective in 3 waves, so I thought, all right, we'll get 5 waves coming down, but we haven't got 5 waves coming down here just yet, and maybe we're not sort of finished in here just yet. But as a corrective pattern, I could label this a couple of different ways, so I won't bore you to death with that. But what I can say is that it does appear to be corrective because it's overlapping structures. This move up here has overlapped this move here, so that makes it corrective. I suppose you could make it a big bear market, but that doesn't sort of play out. So it does appear to be, it could just go straight up from here, or we could just be, the norm would be to make a new low below this one here in 5 waves coming down through here. So I do need to look at this on the intraday, but as a general pattern on this daily chart here, it's quite a nice wave 4, but we'd need to see some moves up there, but it's not really giving me any answers. But I was looking at, I'll just continue continue with this actually just onto the 4-hour chart and then the hourly chart and so on. Before we have a look at the banks, because CBA's made a nice move up, and that's changed, well, hasn't actually changed things yet, but could change things. So in a nutshell here, I was looking at, this wave 4 being over here, that's a wave C, then up for wave 1 here, an A and a B and a C here. It's rather big and complicated for a wave 2, I've got to say, in relationship to wave 1. So that's a bit of an issue, but it is chogging along and, moving up. So that's good. It's just that if it moves below the 7,000, our sort of, rough looking support level here, well, then we would need to look at, start looking at it coming into that equinox period of the 21-22 and that over here. So making another low into that space, which is all doable. I would need to count them as WXYs and so on because of their patterns, and that's acceptable within a wave 4. So I still don't know if I've got wave 4 here or I've got wave 4 over here. The move up through here would probably give us 5 waves up if we could make another high here. I would turn bullish if we got a classic trading levels pattern on the 72. Now normally I would be turning bullish on the 73 here, because the 3 is minor group 1, and if I do get a support on that, then I know the market's leaving the 7,000, so I would be looking for that. And I've left these old trend lines in here because they've played their sort of part, and I just thought I'd leave them in there for a little while longer, because I suppose we don't need them there really, so I will remove them, but they've been sort of handy, but I can see that they're working with the levels anyway, so it doesn't really matter. So really it comes down to this move here. Is this move, impulsive to the upside in 5 waves, or is it corrective? So before we have a look at that, as long as this low stays in here, then we can be bullish in this market. But as soon as that's taken out, well, then we're obviously bearish at that point, or the 7th, that's all about this number here. So then it's just one step at a time. It looks like it's trying to find support on top of the 7,100. That would be a step forward in that regard. It's had in terms of classic trading levels patterns, had the arrival, the reaction, the first high above the level, and some type of corrective move here. So taking out these highs for day traders could get you higher up to the 72, and then we would need to see the same thing again at that point. So it's just sort of step by step with all of this. This was the hourly chart that we're looking at, so it's possible that we've got wave 4 here, a bit sharp for the C wave I thought, and we've just nipped out that top over there. I mean, B waves can do that as an expanded flat and everything is fine at that point. Back to the daily chart. I meant to go to the hourly chart, sorry about that. Thought I'd seen that before. So then I was looking, in line with the US markets, we're looking at the US markets like moving lower. So then I think to myself, well, at this stage here, this move up here, we could look at the A wave and the B wave, and then wave 1 and 2 and 3 and 4 and 5. Now wave 3 is a little bit short, but it's probably okay in relationship to to this one here. But the point here, what I'm trying to make is that from this low to this high here, it counts as corrective, so the market can come down as wave 1 here, back for wave 2, and move lower here. All right, so that's something that we need to be mindful of, and day traders should be looking to be on the short side from that point. But also too, let's just if the market is bullish and moves up past here, well then it kind of destroys this bearish rally here, and then we can start looking at a more bullish move at that point, okay? But that hasn't happened yet. So, but if we do take that high out here, then we can start looking at that. And as I mentioned, if we do get to the 72, which is the old COVID high too, so this is really kind of what the market's doing, is vibrating around that old high in the bigger picture if you go to the monthly chart. So here we've got the arrival, the reaction, the first high above the level, some sort of corrective move move here. So, you know, taking maybe if we look at this, it was 100 here, then we go 10, 20 and 30 in here. So that means that 7,130, if that became the support, then you can go long from that point. So that would be one thing, because Friday's normally bullish in a bullish market, and the rest of the market out there is not bullish, but Australia can be viewed as bullish. So a classic trading levels pattern for day traders on 71.30, that would be a nice step forward, and looking to add at 71.50 and then exiting at 71.80 and 72, and then waiting for another classic trading levels pattern at that point, because then we could start looking at an impulse wave to the upside at that point. Now, the interesting thing with CBA here, you know, when we're looking at just going back to the banking sector here, the XXJ, it's had a nice sort of correction here overall, and like I mentioned, it can be counted in different ways. I don't know if that's the low there. I don't quite know if that's finished. I know there's got a beginning, and this is the middle, and this is the ending pattern here, so we may get another low in here. It would be the norm, you know, but to take out this low here, that would be the normal thing to do at that point. So we'll see how that plays out. But it's sort of interesting here as well, in that with CBA here, you know, I could always put, you know, this over here as an A wave, a B wave and a C wave here, a little bit short, but that's okay. We can have wave 4 there. We can have a look at wave 1 here and back for wave 2 here. It didn't take the low out, but that's sort of pushing it a little bit. So it made me sort of think of, well, if it takes out, if this moves up here and takes out this high here, then we have to remove this wave 1 and 2 at that point. And then I think to myself, well, what are we left with? Do we put wave C over here with wave 4 here? But it doesn't really give me a nice 1 and 2 here. So it hasn't got really the right look and feel about it. So then I think to myself, well, perhaps all of this move down here is just the A, B and C here for the A wave in here, and then an A, B and C here for the B wave, and then down for the C wave. Something sort of corny like that. From that top here to the low here, this is the 61.8% mark. So this is it here again. So if we were going to be bullish here, as I've always mentioned, if we get a support on the 100, we can turn bullish. But I'd also need to see this move up here in 5 waves. So we could look at this as 1 and 2 in here, and 1 and 2 in here, and a little 1 and 2 in here. So, but in a nutshell, to clean that up, we would need 1 here and 2 here. We would need 3 and 4 to come across here. We would need 5 to come up here, and then we would need an ABC correction here. And then this would leave us with our long trade at this point, and that would be safe at that point. And because if that was a wave B here, then we'll be coming down for the wave C at that point, and then that would simply come through the level here, come back up and test it and drop at that point, and give us 5 waves down here, coming into that March period of 20 there, so 21 to 23 in that space. So this is how we'll approach the long side of it. But just to be careful about this being an ABC here for the B wave and down for the C wave. So we can have wave 4 over here, and we can also have wave 4 sitting here as well. Not such a good look sitting here. I mean, all of this is fine as an ABC pattern here. And the thing is that this move down through here has always been in 5 waves, and this move here has always been in 3 waves. So technically we should be taking out this low here. Is sitting on this current low here okay? Yeah, but you know, not the best looking thing, but it's possible. So that's a little bit slim of having that as a C wave, and then it's also a little bit slim of having this. That's okay as wave 1, but as a wave 2 there, that's a little bit dodgy. So I've got 2 dodgy things here for calling that in. So that's why I need to put a little bit more emphasis on this situation over here. So you know, we can see the edge of the forest, but we're not out of it yet, you know. So look, it's just a time thing, and I just think we need to be patient to get it right, rather than making lots of little mistakes. But in a nutshell, this market has been dancing across the 100 in the bigger picture, so we're just really waiting for, you know, we could have all of this as wave 3 and wave 4 over here, which would suit the banking sector. If we did drop a lot lower, then I would be looking for wave 2 in there, like we're doing with some US markets. But yeah, so we're looking for the long trade. This is a correction, across the 100 here, and when it's finished, we need to be on it, as such. I mean, if you've got faith in the banking sector, you can buy at these lows here, and and buy lower again if you wanted to. But my job is to get the timing right. So that's and have safe trades. So that's what I'm doing, and this is how I'm approaching it. So yeah, just still dancing with wolves in this space. So the ANZ, I thought would have a bit of a look at that, because from wave 3 over here, if we do look at this as an A wave here, then A, B, C, D, and E here for a B wave. Triangles can be in wave 4s or Bs. And then look at this as 1 and 2 here, and 3 here, and 4 here, and 5 here. That will also take us into that equinox sort of period as well. So that could be, I mean, you're just sort of getting into the guessing game here a little bit. But let's see if we get a rally here for this wave 4. We were always expect to bounce off a large number anyway, so that was pretty easy analysis. But that said, we will be looking for a 38.2% retracement level, thereabouts, so 40%. So it's kind of getting there, let's just allow that to play out, and let's see if we get this finishing off here. And this might spend a few days here, and it may even hit the lower end of the 2650, the lower end of group 2 here, where the support is here. This is all minor group 2, retesting that, and then a push down, and that push down, we'll see how that goes and lines up with that equinox period. And if it trades below the level here on this wave 5, then we can get a classic trading levels pattern on the long side on 25, and then move up from that point. Alrighty, iron ore. So over to the resources. So we're looking at iron ore being a daily chart here as wave 1 up here, with an ABC for wave 2, and then up for wave 1 and back for wave 2. So it's already in the box at this point, and then pushing up higher at that point. Now it's possible that wave 2 is still over here, and this can be a B wave up here, and we come down for a C wave over here, because this little ABC that I've squashed up here is not really the done thing, but doable. So but just repeating the same story here a little bit. But the green line here is not because we trade iron ore, we trade BHP and so on, and whatnot, but it just gives us a trigger. If that gets triggered here, then we know that any stocks that are following this particular pattern will be viable for long trades at that point. Now this is BHP's following that pattern a little bit there, so we can go long above that high there for that. We can look at this as wave 1 up here and pulling back for wave 2. Is that finished, or are we going to come further down? I'm not quite sure, haven't checked the intraday, not that sort of fussed about it, but if it does take that top out, you know that you can be long. It's hit the 61 point, well, close to it. I haven't got that quite on the top there, but good enough at this point. So let's just see. But there's no problems in in buying these sorts of stocks that we're looking at here, because they've all got 5 waves up. So that means they're going up higher. And this is the place to buy them. I keep I keep saying buy. It doesn't matter where you buy, because we're in a trend, So, but I'll put these triggers in as I have done on the intraday right from the low here. But then I'll remove them, but they're just a little bit sort of helpful, I guess. RIO here went ex-div, so it helped us. We'd been, as you know, looking at 1, 2, and then 1, 2, 3, 4, 5 for the third wave, fourth wave, and then looking at 1, 2, 3, 4, 5 up here, and then seeing it pull down ex-div. This is the 50-60% retracement level, so I think that it's okay to buy in the box here. Not leverage CFDs and things, but just normal shares. If it doesn't reach the box and it just drops back, pushes straight up from there, then just buy that high there. Now, probably what will happen is that it will go up and buy that high here, and then it will come back down in here. So just be prepared for that as well. But dollar cost averaging in this box down here is fine, and we still yeah, hopefully we just get all of that as the ABC pattern within that straight line there, hopefully. The FMG side of things, we're looking at, well, an A wave here. This looks like 5 waves here, so I'm still going to go with the A wave, the B wave, and the C wave here for the B wave and then down for the C wave. Is it possible that that can be the B wave there? Yeah, sure it can. It doesn't look like a corrective move in here. Looks like an impulse wave to me. In terms, you see how that little move cuts come down here. So I can visually sort of see inside of that as 1 and 2 here, and 3 and 4 and 5. I don't need to go to the intraday to see that. So we'll just see how this sort of plays out. But once again, I think I'll just turn this box green because. You know, it doesn't really matter. You know, bring it down here because iron ore's going up. You know. Okay, so US spot golds here, where this is 5,000 ticks, nothing special, but we are snaking across the 2,000, roughly the old high, major trading level 2 here. We're looking for an A wave, a B wave, and a C wave. But I do need to mention to you, it's possible to have the A wave in here with the B wave here and the C wave in here for this. So we need to be, even though that may not be the case, we need a strategy to take that on board in case that is the case, because we don't want to be sort of left staring in the headlights, sort of, so to speak. So from the high to the low, this is the 50-60% retracement level, which is quite handy really, because it leaves us at the top of group 1. When we're talking about 2,000, we've got group 2 below. Its job is to pin the market back to the closest largest number, and it's the job of group 1 here to pin the market back to the closest largest number. If it can't pin it back and it develops support on top of the 30 there, the number 3, then it's going to go up from that point. So a classic trading levels pattern sitting on top of that level there would have you on the long side. So of course we'd go long above, you know, we always put that at the top there, because really it's the arrival, the reaction, the first high above the level in 5 waves, and then the ABC pattern, and then we go to buy on top of here, and then we can drop it down to here. But we don't really have 5 waves up there yet, and I just want to be a little bit safer in case it pulls back a little bit deeper here. You know, it could do that. It could do it from here. It could move up into that space and do it. So if we get a classic trading levels pattern there, we can go long from there. Now, if you want to make a move in earlier than that, well, that's fine, as long as you know the risk that you're taking, and there could be another leg here. Now, how deep can that come? Well, if there's normally a bit of equality between structures, so we can look at this here, and then we could probably just move that over to here, and that would be there. If it was going to drop from here, well, then it will be down to 1900 at that point, so that was something that you'd have to take on board at that point. That said, looking at this as possibly being wave 1 up here, we've been looking for just using Newcrest Mining here as a template, because there's lots of stocks that have come from that point on the 28th of January and moved up. Now, if your gold stock looks like this, our job has been to count 5 waves up here. So we're pretty close to getting it here, and we'll look for some sort of ABC pattern to come into this space here before heading higher. Now, it may just sort of continue to move up here and then have it from here as well, but I don't see a big problem in buying this stock or gold stocks, you know, in that space, basically, anywhere in this space. It doesn't matter, just dollar cost average. It doesn't have to, if you're trading CFDs, then it's a different story. But I don't think you should be trading CFDs in CFDs are really are just good for shorting the market and hedging, and that's what they kind of should be used for, unless you're, you know, really know what you're doing. But otherwise, you know, they can carve you up pretty quickly with that leverage. And secondly, the overnight financing fee that you're not really, you know it, you're aware of it, but you don't really see it accumulating in your account, because they're clipping your ticket every session. At the end of every session they're clipping it. So but if you're holding big orders, that's a lot of money it builds up over. So still, it's the cost of money, isn't it, I suppose. But anyway, so that's where we are there. And the Australian dollar, we were looking for an A wave here and then a B wave here. I think that could go a little bit higher, actually. It doesn't look like it's, well, it could be a 1 and 2 and 3 and 4 and 5 in there, but in one way or another it may go a little bit higher or whatever, but we're looking for it to move lower. So just be mindful of that and use your own tactics if you want to short that. Alrighty, I'm going to leave it at that, and thanks for tuning in. Enjoy the weekend, and I'll see you in the next video. Cheers.